Good evening and namaskar, friends. Today we will look at a finance company which is progressing very fast. The name of the company is Spandana Sphoorthy Financial Limited. It is, of course, engaged in the business of microfinance, providing small value unsecured loans to low income customers in semi urban and rural areas. So it's not going for any major large scale lending. It is lending to small people who want small scale loans, unsecured loans, basically unsecured loans. So it is registered as the NBFC MFI with the Reserve Bank of India. So they are recognized as India's largest microfinance institution. You see, among microfinance institutions, it is the largest in terms of PAT and sixth largest across the globe. It is not going for medium scale loans or big scale loans. It is going only for small scale loans, which are rather risk free. So the company is catering to 24-25 lakhs of borrowers. We will see that later on through its 2,100 branches and something like that across 316 districts in 18 states. So 82% of its assets under management is coming from rural areas. Product offerings naturally are microfinance loans, small loans, loans against property, that is secured loans, business loans, personal loans, but all under small category, gold loans and consumable durable loans. Spandana follows both group based and individual based microfinance lending model. Loans are given to individuals based on their household economics. Microfinance loans are disbursed by SSFL and other loans are disbursed through CFL. And the company has a marketing arm called Abhiram Marketing for providing loans for the purpose of consumer durables. Loans are held in the books of SSFL and sale is booked in the books of Abhiram. There are some subsidiaries. Chris Financial Holdings Limited (CFL). It is a 98.2% subsidiary. Caspian Financial Services is wholly owned. Now, what about the management team? Miss Avanti Mitra. Avanti Mitra is the non-executive chairman and independent director. Mrs. G. Padmaja Reddy, a large shareholder and also non-executive director, and Mr. Shalab Saxena is the managing director and CEO. The capital adequacy ratio, etc., relating to last year, 47.9%. Net interest margin was 9.9%. Number of branches was 1,179. I will give you the latest number also later on. Loan officer 6,999. Borrowing mix, if you see for the last year, PSU banks 99.9%, private banks 28.1%, capital market 35.1%, NBFC, that is also distributed. Who are its lenders? Means public sector banks, private sector banks, capital market, NBFCs, DFIs, FPIs, etc. Borrowing cost is around 11.8%, 9%, something like that. Now, state-wise, if you see, Madhya Pradesh Orissa, Karnataka, Andhra Pradesh, Maharashtra, Bihar, other states. Other states are less. These are the biggest states where lending is going on. Companies' operations are therefore well diversified at the branch level, district level, state level. So a lot of branches are there, around 1000 branches, etc. With each branch has got less than 0.15% exposure in the total assets under management. Ms. Padmaja Reddy was the original founder of the company. She resigned from her position as managing director in November 2021 due to some dispute with the then directors, etc., of Kedar Capital, and thereafter it was all reconciled, and she continues to remain as a major shareholder and well-wisher of the company and as a non-executive director. So at that time she had resigned. New management has made a one-time cleanup of the pre-March 2001 booking write-off of 702 crores, reducing the NPA from 1067 crores to 367 crores. This was a one-time exercise with no further write-off expected in subsequent years. Market cap is around 4,962 crores. Current price is around 699 crores. 52-week high is 751 and 52-week low is 287. From 287 it has come to 699. High was 751. Will it go up? It is likely to go up. Why? We will see. Stock price earning is high. Book value is also high, 429. ROCE is around 6. ROE is very low. Return on equity is very low. Face value is 10 rupees. Now, if you look at the price graph has started going up, the upward trend from March. See, some of the negative points we will have to keep track. The company is not paying any dividends. Though it is making good profits, it is not paying dividends. Interest coverage ratio is somewhat low. Return on equity also is somewhat low. Now let us look at the results. Net sales are 498.1 crores in Q4, 354.7 crores in Q3, and 286.8 crores in Q4 of last year. So year-on-year improvement is around 73.7%. Quarter-on-quarter improvement is 40.45%. So which is very good. Provisions during Q4 are 122 crores. In Q3 it was just 44 crores. In Q4 of last year, just 19.97 crores. But in the June quarter, it was 351.72 crores because of one-time write-off, etc. So year-on-year improvement is 512% and quarter-on-quarter improvement is 174%. Both are good. But in between the June quarter, April, May, June, that is Q1 of FY23, there 352 crores almost was provided under provisions and contingencies. Now net profit is 105.5 crores in Q4, 71.37 crores in Q3. That means a very good improvement. Quarter on quarter improvement is 47.88%. And net profit was minus in Q1 because of the provisions thing. Minus 220%, 220 crores in that Q1 quarter alone because of high provisions. But otherwise, other quarters were very low. Provisions were, last Q4 was 28.61. Current That is net profit. Q4 of last year was 28.61 crores, and Q1 of FY23 220 crores loss. Thereafter 55 crores profit, 71 crore profit, and latest quarter is 106 crores. So net profit has gone up by 269% year on year and 48% quarter on quarter. So EPS also 14.87, so that is reasonably good. Previous quarter 10.5, but Q1 of last year minus 31.42, high provisions in that one quarter, one-time provisions. Before that Q4 was 4.55, so EPS also has gone up by 242% year on year and 48% quarter on quarter. So except for that one quarter, Q1 of FY23, all other quarters were good. Now the current price is 657, something like that. 52-week high was 695, so current price is very close to that. 52-week low is 287, which is far away. Now it has come very far away from the 52-week low. Now if you look at the price earning ratio, it is hardly around 11 now. That is on 657 current price and 14.87 basic EPS. If you calculate for the 4 quarters, that is annualized EPS and the current price 11.05 is the price earning, which is very nominal. Now if you look at the P&L from FY19, FY20, FY21, FY22, FY23, sales have gone up from 1036 crores 5 years back to 1329 crores in the latest FY23 year. Operating profit, earlier it was 829, 932, 583. Last quarter, last year was 573, now 408. Why 408? Because of high provision in Q1. Net profit it was 5 years back 309 crores, 4 years back 337 crores, 2 years ago 129 crores, then 47 crores, then 12 crores last year because of that Q1 high provisions. So that is gone. That management assures that it is a one-time provision. Now, therefore, only the trailing 12 months compounded profit is minus 74%. But in future, if you look at the future, I think it will be good. Now, balance sheet, if we go especially to borrowings, in FY18 it was 2,331 crores, then it went up to 2,945, then 3,016, then 5,197, then 3,631, and latest year FY23 5,934 crores. Why is it going up like that? Because it is a financing institution. They have to borrow and then they have to give at a higher rate. Then only they make money. So currently they have gone for another tranche of borrowings. That is debentures. Cash flows are reasonably okay because they are taking loans. They are taking loans and giving loans. Now if you look at the promoter shareholding, it is at 63 in Q4, 63.01% in Q3, 63.59 in Q2, Q1. So it has come down marginally, not much. The latest quarter is 63, previous quarter is 63.01. FIA's holding has gone up from 19.59% to 20.24%. DIA's holding has come down from 8.89 to 8.43. Public 8.51 to 8.32. So what has gone up is FIA's percentage has gone up. Promoters percentage marginal reduction. DIA's and public has come down. Now if you look at its strength, good quarterly growth in the recent results. Q4 is very good. Q1 was bad because of that one-time provision. Growth in net profit with increasing net profit margin quarter on quarter. Increasing revenue in the last 3 quarters. Increasing profits likewise in the last 3 quarters. Only Q1 was bad. FPIs are increasing their shareholding. It is very near to 52-week high. We have seen that. Far away from 52-week low. Stock gained more than 20% in 1 month. Strong price momentum is there. Because it is taking loans, high interest payments also is there. Now the overall performance is okay, reasonably good, very bullish. Market cap 4,659 crores. Sector PE is 29.43. Book value 416. Long-term curve is not great, but from March onwards it is going up. Why long-term curve is not great? Because of that Q1 performance. Price is for just 5.55% away from 52-week high, but 129% away from 52-week low. Current momentum is bullish. Piotrowski's score is just 4, so weak financials because it has to take loan and also give loans. Market cap is reasonably high in the industry. Trailing 12 months PE ratio is high in the industry. Price to book ratio is above industry median. Profit growth, if you take all the 4 quarters, it is negative. If you take only the last 3 quarters, it is very positive. Revenue also like that. Operating profit also, now it is okay. Promoters have pledged 7.71% in March quarter. It remains unchanged at 7. It was pledged earlier. It remains unchanged at 7.71%. Their holding has decreased by just 0.01% in March quarter. So price performance is improving. Now assets under management has increased by 24% quarter on quarter. Clients addition is up by 95%. NNPA is at 0.64%. Profit after tax has increased by 48%. Disbursement is at 3,054 crores. Continued momentum in fundraising and fund disbursal both. So new lenders onboarded are 8. Total lenders are 48. Funds raised 2,402 crores. Funds has been raised 12% more quarter on quarter and 680% more year on year. Cash and bank balances are very good. Some 1,500 crores. Net interest income is some 384 crores. Profit after tax 106 crores. Year on year improvement 269%. Quarter on quarter improvement is 48%. Year on year, if you see, assets under management has increased by 29%. Client addition is up by 294%. NNPA is at 0.64%. Profit after tax is up by 269%. 112 new branches have been added. So there is positive momentum across many operational vectors. Number of borrowers is around 28.6 lakhs. Assets under management per branch is 6.9 crores, up from 6.1 crores in the previous quarter. Number of employees 10,016, up from 8,732 in the previous quarter. Number of loan officers, people who are directly connected with loan giving, 1,227 people, up from 1,115 in the previous quarter. New members acquisition is driving growth. 95% growth over Q3. 50% loans to new members in FY23. New members acquired are 4,27,000, up from 2,19,000 in December 22. So focus states contributing 29%. So we have seen Gujarat, Maharashtra, Haryana, Bihar, West Bengal, Tamil Nadu. Other states contribute 71%. Robust momentum in disbursement and growth in assets under management. Actually, it is 29% more from Q3. Year on year, it is more by 141%. Quarter on quarter, it is more by 29%. Year on year, it is more by 141%. Now, latest they have the board has met in June or something like that for issue of non-convertible debentures. So the lender base also is well diversified. We have seen public sector banks, private sector banks, FIIs, etc. So 8 new lenders have been identified during the quarter. So borrowing is going on and lending also is going on at a furious pace. Total borrowings are at 2,402 crores in Q4, up 12% from Q3. So well diversified funding, PSUs, private banks, NBFCs, FPIs, capital markets, etc. So latest capital markets, mainly debentures only. Capital adequacy is 36.3%, very good, but it is down from 39.1% in Q3. Current loan book is up 92.1% to 96.6%. 92.1% to 96.6%. Collection efficiency is very good. It says it is 102.5%, up from 102.1%. Provision coverage ratio is 70% on the unsecured portfolio. Cost of borrowing is at 12.4%. Earlier it was 11.5%. Total income is going up. Operating cost is also going up. Finance cost has come down. Finance cost has come down from 540 crores in FY22 to 458 crores. That is 15% in FY23. Profit after tax in FY23 is hardly 12 crores. But Q4, see, we are talking about FY23 as a whole, which includes Q1, where there was a huge write-off. So, but thereafter, Q2, Q3, Q4 are very good. So, Spandana Spoorthy is performing very well from Q2, Q3, Q4 onwards. Future also is expected to be very good. The current price earning ratio also is reasonable. They are taking money, giving loans, and their collection efficiency is very good. Therefore, overall, Spandana Spoorthy is in a very good momentum. Maybe after 1 year, we will see it at a very good place. Already it is at a good place. So, it's a good financial company. It is lending only to small loanies. So therefore, the risk element also is less. Collection efficiency is very good. They are taking loans from trustworthy lenders. So these are all there. Now think about it and listen to it 2-3 times. And whoever has not yet subscribed to this channel, please do subscribe. I will bring to you very good, wonderful performance companies only. But in spite of that, out of 10 wonderful companies, 1 or 2 will fail sometimes. Therefore, your duty is to watch every quarterly result and go on taking decisions to buy, hold or sell. Thank you for listening. I will be back with you with another very good company. Thank you.